So let's get to our market panel. Vital Knowledge founder Adam Crisafulli and Kestra Investment Management CIO Kara Murphy. Great to have you both here. Adam, I'll start with you because it really does feel like we're in the calm before the storm here. As we know, earnings are going to start to ramp up really in earnest tomorrow. We don't get a lot of macro data this week. That changes next week. But we've got perhaps some profit taking as yields move higher. Your thoughts on the markets here?
Yeah, I think today was definitely just an example of relatively normal profit taking. You saw a pretty big move in yields. I think the big question is whether that's a function of resilient growth, which we definitely have seen, or if it's a function of some fiscal fears starting to seep into treasury markets as we look into next year and the enormous challenges that are going to be facing Washington, regardless of what happens in the election. I think it's a little bit of both. Like you said, this will be a very busy week of earnings. We've already heard from most of the large banks, and they've given us a pretty good lay of the land as far as the broader macro landscape is concerned, and it's a pretty healthy environment. And I think that's what's driven stocks higher over the last week and a half or so. Resilient growth, cooling inflation. We have stimulus with most central banks cutting rates, plus what China is doing. And now it's just a question of, again, how high do yields go? Is this just because growth is doing better, or are markets starting to pay more attention to the fiscal challenges next year? And I think that's kind of the real dilemma, the real question right now for investors.
Yeah, it's pretty startling to realize that in fiscal 2024, the U.S. government paid more on interest than on defense. Kara, it does feel like two E's here. You got earnings and election. This week, what's really driving the narrative is earnings. So far, they do seem to be coming in better than expected. But we also know it's a high bar with the S&P arguably richly valued. I think we're having a little bit of a technical issue with Kara. So, Adam, I'll put the same question to you. Earnings and election, an S&P that's trading at 22 times here. What are you watching the most closely, especially as we do start to dig into some of these different industries and different results this week?
Yeah, I think the valuation, it's not prohibitive. It's not necessarily a reason to dump equities wholesale, but it certainly provides a lot less cover for the market to absorb any type of macro setbacks. And like you said, we're moving up towards about 22 times next year's estimate. That's a very healthy multiple. And then as you have yields rise, that just kind of exacerbates that valuation headwind. So definitely earnings this week. I think some of the cyclical companies will be very interesting. If they are seeing any type of a rebound in momentum, are they seeing any hints of change out of China, given the stimulus steps that they've taken? Some of the September data out of China last week was somewhat encouraging. So the cyclical names I'll be watching closely, capital goods, transportation companies, et cetera. And then obviously as we get into the big tech stocks, just given their dominance of the indices, they will be crucial as well. Is the AI momentum continuing on the growth front? Has there been any shift in the trajectory of CapEx on AI? This has been a big controversy now for the last couple of quarters. The ROI on that CapEx, is it sustainable? Are companies becoming more efficient in how they're spending CapEx? That will be very important as we listen to the calls from Microsoft, Amazon, Google, et cetera.
Yeah, and Kara, we're about to get SAP numbers shortly, and that's a very big enterprise software player, big ERP player. A lot of companies spend money on that, trying to get their internal systems right. And I can't help but notice it comes ahead of IBM and ServiceNow in just a couple of days. How important a signal is that going to be in a market where today we saw technology as the only S&P sector in the green?
Well, I think the wonderful sign is that we're starting to talk about earnings again, right? I think everybody is happy to kind of start to put the election behind us and focus again on the strength of the American corporation. And I think some of those names that you mentioned are really instrumental in sort of getting a pulse on what business activity is happening. So we'll be following them very closely, not just for what's happened over the most recent quarter, but then their expectations for 2025 and whether that momentum can really carry them into next year.
And so, Kara, we saw sort of the market defy the usual September headwinds, and we've got the volatility of an election year and a market that's not cheap. So what do you add to in an investing strategy heading into 2025? Where do you sort of set your compass where you can be pretty confident, at least until some big event, that you're heading in the right direction?
There's been an awful lot of focus recently on on large cap valuations and looking at the S&P valuation overall. But let's not forget that once you get out of some of the highest valued companies within the S&P 500, valuations actually look much more reasonable. They're a little bit rich in S&P 500 X Mag 7, and then once you get into things like mid caps, valuations actually look pretty attractive. So we think heading out, what you can add to a portfolio is start to rotate out of some of those names that have done well over the last 18 months or so and start to dive into those parts of the market that have been largely overlooked for quite some time now.